So, Andrew, one of the things that we always used to go over was the producer price index. You put together a special index, and I've always been a big fan of it. I mean, we were just talking about overall producer price index from the U.S. government, but what's one of the ones that you have coming out?
Yeah, so the DHL Supply Chain Pricing Power Index that comes out every Friday or Saturday sometimes, but usually Friday. So last week it stayed at 70. So this is, of course, the scale of 0 to 100, 0 being full power to the shippers, 100 being full power to the carriers. This is, of course, in rate negotiations. So for the past 6 months or so, it's been a carrier's market. We've seen that number tilt all the way up to 85 at some points. It's shifted down to about 70 right now. It's been at 70 for the past 2 weeks. And really, the reasons are that we're not seeing much volatility in volumes. Things are staying pretty strong. It's not that we're seeing any decline. We're in that $15,000 or 15,000 range on the OTBI. That is extremely strong, but we're just not seeing much volatility. That volatility gives carriers some opportunities to squeeze some extra money out of shippers, but we're not seeing that. We've also seen tender rejections tumble since that kind of beginning of March, after that polar vortex that we saw across the country, where tender rejections flew up to about that natural ceiling of 28. They've tumbled since then, but again, we're at 25%. So carriers are still rejecting 1 in 5 contracted loads right now, which is extremely high. And the reason that we've seen kind of the pricing power shift back to the shippers a little bit over the past couple weeks is we've got contract rates and spot rates that have peaked for this kind of cycle within the cycle that was induced by that polar vortex. That doesn't mean we're going to see any downward pressure on rates. We've got spot rates still above $3 a mile across the country. There's not going to be much downward pressure, but we're not going to see, I don't think we'll see that retesting that recent highs anytime soon.
So that was the other thing I was going to ask you. You also put together your future expectations for the DHL Supply Chain Pricing Power Index. So that expectation for rates to not really kind of skyrocket or increase drastically.
Yeah, we're kind of in the motion here that we just kind of think chaos is the new normal. That's what we're expecting for the next several months. We don't see any abatement in demand. We have so much inventory restocking still ahead of us. Consumer demand remains strong, up between 10 and 15% across many goods categories over 2019. So a lot of strength on the consumer side. We've got some strength on the industrial side. We've got volumes gushing from across the country, and we don't have meaningful capacity being added. What we're seeing right now with contract rates and spot rates peaking and coming back down, I think is just the fortification of routing guides and seeing contract rates being marked up towards spot rates. That is going to put some downward pressure on spot rates, but nothing significant. And I think we're going to see strong rates through the end of the year and into 2022.
Brilliant. Andrew, thanks so much for chatting with me on these topics and looking at the DHL Supply Chain Pricing Index. Looking forward to next Friday.